As you all know, Mexico is passing through a very crucial moment now. The energy reform passed by Mexico's Congress last year gave a lot of opportunities to investors in the energy sector, but against that we have a backdrop of dropping oil prices. Notwithstanding that, there is optimism because over the past year and few months, we've seen a lot of significant investment from private equity firms in the Mexican energy infrastructure sector. And today we're going to hear their perspective and have an opportunity to ask them lots of questions about why they're there and what they're worried about. So it's a pleasure to have with us today Adi J. Blum, Director at First Reserve, Javier Chavarria, Senior Vice President at Partners Group, and Marisol González de Cosío, Director of Utilities and Infrastructure at Standard & Poor's. The panel will be moderated by José Enrique Arrioja, who is Editor-at-Large Latin America at Bloomberg. I would like to thank our Mexico Series sponsors, who are HSBC and MetLife, and this panel is also part of our Energy Action Group, which is run by our colleagues in Washington. And finally, I would like to welcome everybody joining us through our live webcast, which is sponsored by Telefónica. And with that, I turn this over to you, José Enrique.
Thank you so much. And how are you? How are you doing today? All right, great. Let's do some first housekeeping rules. If we made, as Randy just announced, we are live in a webcast by at the Council of the Americas website, and also this is being webcasted or broadcast in the Bloomberg Live function in our Bloomberg terminal. So the good thing about those two elements is that if tomorrow you want to just replay whatever of the three panelists, very distinguished panelists that we have here, you can do so. You're just simply going back to those specific places. We have a representative of the press, meaning that this conversation is fully on the record, and we thank all my colleagues that are in the room. I'll try to do my best in order to get the most valuable information from these three panelists, but I need you. I need your help. I need you to be very interactive with me throughout this period of time. I hope that we're going to have a very fun and engaging conversation about what the future holds for the energy sector in Mexico. No? Stay tuned, don't leave me alone. Thank you so much, starting with you, Marisol, Javier, and Adi for being here today. And let me start with Marisol, if I may. When we talk about the energy sector right now in Mexico, and we talk about, all those recent changes that we see in the legislation since 2013, and the recent amount of news coming from Mexico and coming from this specific sector, what is your reaction has been so far? You that specialize in monitoring and covering utilities and infrastructure companies in that country.
Mm-hmm. Well, first of all, obviously it has been very exciting to be part of the infrastructure group right now as the market starts to become very, very active, and we start to get a lot of questions from investors, and people start to wonder, like, is it safe to invest in Mexico, and what's the best way to do it? But some of the changes that we have seen, and I think these two gentlemen represent what the sort of investment that was being made even before the energy reform, and that's basically midstream. So Presidente Calderón had already announced their plan, like his plan to connect the Mexican economy to the cheap US shale gas in the north, right? And to take advantage of the geographic location of the country. So in that sense, the investment that we have seen in terms of transportation of gas is not a consequence of the energy reform, but it's more of a consequence of where the country is located and what the previous administration had already also started to look at. Now, in terms of the energy reform, I think that what will come is going to be very exciting, but it's still yet to come, right? And some of the rules have finally been defined, and last year, I think, was the year of setting the rules. And if you wanted to invest in Mexico, what could you expect, and what were going to be the new regulatory regimes, and what was going to be your competition, and basically what was CFE and Pemex going to look like after the reforms. And that's one of the questions that everybody still wants the answer, and I don't have it. But overall, I think that it's becoming clearer, and I think that in that sense, electricity is gonna start to show some results even before the oil sector. And in that sense, I think that next year is gonna be a year where a lot of investment is gonna start to happen, mostly in terms of generation, transmission, and distribution.
Speaking of investment, the ink is still fresh for this gentleman next to me. And I'm talking about the ink that you guys put together in March and also recently in April. In late March, First Reserve and Blackrock agreed to acquire an equity stake in Los Ramones, which essentially is the biggest gas pipeline ever built in Mexico, all right? And that's just one thing. And then you just days ago in April, all right, you also announced a partnership with Pemex with $1 billion to invest in infrastructure projects and energy infrastructure projects. Tell me a little bit about the rationality behind these two big decisions.
Sure. Well, first of all, thank you to the council for the opportunity to speak. Thank you, Jose. Thank you, Max, for organizing. Yeah, so this has been a long time coming for us. We've been in Mexico for quite a while. In our infrastructure fund, we have a couple wind farms down in Oaxaca, and we're working on other projects in the power side. In our private equity business, we've had service companies that have done work with Pemex in the past. So we're not new to Mexico. These particular projects, Los Ramones, we invested in two different segments. This is a project that we first looked at back in 2012. And the project had different iterations, and then it was broken up into pieces. I mean, for us, the project, it represents, and you'll hear it from Mexican officials, it's one of the most, if not the most important infrastructure project in Mexico right now. And it's a large pipeline. It's 42 inches, so yeah, it's significant. And its purpose is to take natural gas from the shale in the Eagle Ford down to the industrial heartland in Mexico. So this project, it's going to spawn new gas-fired generation, new manufacturing capacity, and a variety of other ancillary benefits for the Mexican people. But that's just the cusp. There's all sorts of other similar projects right now that need to happen, and that Pemex and other entities in Mexico need help, and they're looking for support from the international community, and we're honored and happy to be partners with them. So there'll be more to come.
More to come. That is very enticing. So, Javier, last year, the private equity industry in Latin America as a whole, suffered a decline of 18% in the numbers of deals that were made, 76 altogether. And Mexico was the star of the year with you guys doing the biggest deal of the past 12 months, essentially, in 2014, when your company, Partners Group, acquired Fermac Enterprises in a deal valued $750 million. Are you happy after that decision? It's a lot of money.
We're very happy. Good evening, everybody. Yeah, you're right. It was probably one of the largest deals last year. It was an investment in also key infrastructure in Mexico. At the time, there was a vision to expand this business and add on to it over time. Yeah, as you probably have seen in the news, we have been successful doing that. We won one of the CFE tenders earlier this year that connects from the south end of our original pipeline at Encino and going to Laguna. And then recently we announced another project on the U.S. side in joint venture with One Oak, and that will take gas from Permian to the border and then will flow into our system in Mexico. So in 12-month period, we basically have done 3 deals, including the original acquisition. So yes, we're very happy with the result.
And let me just ask you immediately, is that type of appetite going to continue? So I'm going to see you guys doing deals at that clip, at that rate going on?
Well, we're interested in what's going on in Mexico, and as some of you may know, there are further tenders coming up this year. There are other opportunities. It's a good time to be investing in infrastructure, given the needs. And as Marisol said, there has been a long-term vision to import gas from the U.S. into Mexico. So the infrastructure is there's still more infrastructure required to do that. And so, yeah, we will be maybe carefully looking at some additional opportunities that make sense, that we have synergies with our existing platform.
Just a minute before starting this conversation, I was just chatting with some of the people, members of the audience here, and the common element that I'm seeing, from our audience today is they wanted to know about the opportunities that lies ahead. They wanted to know details about this. Let me just give you this read here, if I may. This was last year, March last year, okay? The president of Pemex saying that pretty much they were aiming to attract $1 trillion in energy investment over the next 10 years. $1 trillion. And that is, of course, a huge amount. But we are mortals here, at least in the room today. And I wanted to ask Marisol, where do you see this opportunity nowadays playing in the universe of companies that you cover on a daily basis? What can you share with the audience today about more human sides of that huge investment that is needed in Mexico?
Yeah. So overall, I think that the pipeline business is one of the most active, as well as the generation business. In that sense, to keep in line with your comments, so CFE announced that they're seeking partners to develop 23 different infrastructure projects, and that would translate into an investment of a little bit more than $8 billion, and that's only in the next 5 years. So in that sense, I think that a lot of the companies that are really that have basically the ones that are already there, they have either CFE or Pemex as counterparties. And what will happen with time is that they're going to start to be able to diversify their client base. Some of the other companies or different generators start to get interested in Mexico and start to actually need gas as well. So basically, what we would expect is that any generation investment in Mexico, it's going to be mainly, at the beginning, it's going to be natural gas based. So in order for the investment to make sense, you have to have access to gas. And that was basically a problem in the past in Mexico. And I think that all the creation of the different pipelines is going to basically open the opportunity not only for CFE to be able to decommission or to transform some of their plants. Basically, right now their plan is 7 plants that actually run in fuel oil are either have already been converted or are in the process of being converted. And what that means is that around 9% of the installed capacity of the country is being transformed from a very expensive fuel to a very cheap one. And in that sense, what the government expects is that electricity prices are going to fall within the next 5 years, like 13%. And this is for industrial users, which basically helps drive competitivity in Mexico, or will help drive competitivity in Mexico. So if this is only considering CFE, if you also are able to bring investors that are willing to generate at lower prices, then we would expect that maybe the electricity prices are going to fall even further, and this would translate into a lot more competitivity for industries, but it would also translate, we believe, in a growth in manufacturing capacity for Mexico in about 5%, which is significant considering the size of Mexico, the Mexican economy, and the size that manufacturing plays. And overall, if you follow this chain of events, and if everything really happens, we could see this translating into a growth in GDP of around 50 basis points, just as a consequence of the reduced electricity prices. So I think that that's going to open the door for other sort of investment that's going to come eventually. I think in that sense, we still believe that some of the oil tenders are going to be successful, mainly the conventional fields. So Pemex cost of extracting a barrel of oil is still around $22. So that still
Attractive-
makes sense
attractive
exactly
enough,
at the current prices.
Perfect.
So maybe ultra deep water, that's going to take a little bit longer with the current environment of prices. But the shallow water still makes sense. So we still think that there's going to be interest in going into the oil sector as well.
Adi, do you agree with that? Where do you see the opportunities? Where are you looking around right now in the landscape of Mexico?
Yeah, I agree. I think the way we look at it, there are opportunities across the entire energy value chain. But we segment it. First is infrastructure, and that's where we're focused right now. So pipelines, electricity generation, both renewable as well as conventional. We're working on another wind project right now that we'll hopefully bring to financial close in the next couple months. And you can still do renewable projects at a discount to the CFE, the current CFE tariffs. Going across the chain, over time there'll be services and equipment opportunities. We think there are services opportunities right now, but they'll increase over time. Just, going back up the chain in terms of E&P, I agree. Shallow water now, I think deep water, sporadic. It'll take a little longer, but I think there will be significant investment there. And then at some point in shale, but that'll, in our view, it'll take a number of years before that develops in Mexico. And then downstream, chemical, all the ancillary industries. We've seen it in the U.S. with manufacturing renaissance brought about by cheap natural gas. I think we'll see the same in Mexico. Just to comment on electricity prices, I think that there are a couple different moving factors here, and if you talk to different people in Mexico, you hear different thoughts. I think the vast majority of the factors does lead one to believe that 5 to 10 years from now, electricity prices will be lower. But then again, you have to consider that there are significant subsidies built into current electricity prices.
Right.
And it's a question of how quickly the government will walk those back, and what that does to the power prices over time. And then also how quickly can the CFE address the electricity losses. I think it's something like 15-20%. So really significant.
That is in the current grid of the country?
Both from theft as well as just inefficiencies
in there.
But so to answer your question, opportunities across the chain right now, infrastructure, but over time, opportunities in every sector.
In every sector. Javier, what do you see things?
A couple of comments, and I guess you can see that both Adi and I are on the investment side, because we find reasons why electricity prices may not necessarily decrease in the short term. I agree with Adi's comment, and not only that, but there's several factors that play into the electricity price. It's the fuel mix, and the fact that those fuels that affect the current basket, know how CFE determines the price. Who knows where they will be 5 or 10 years from today. I don't know if anybody would have predicted oil prices to be where they are today, only a year ago or 2 years ago, and that has a significant impact on electricity prices in Mexico. I would think that also in your first comment, the majority of that $1 trillion investment, and I don't know if that's correct or not, but the $1 trillion is a correct number, but I would imagine a good part of that goes into offshore, upstream investments, whether direct or indirectly apply to the sector. It's obviously a very capital-intensive industry that will require a lot of investment just to catch up on everything that Pemex has been lagging for the last 10, 15 years. And then that promotes other services and other additional sectors that go along with that. As far as the interest and where we see opportunity, again, very similar to what Adi mentioned. We're focusing here mainly on energy, but as far as Partners Group's strategy, we invest in infrastructure in general, not only energy. So we're looking at other things as well in infrastructure, telecom, transportation. Maybe, again, not exactly the topic of conversation today, but that's something we see there.
Okay. Marisol, if we see the big picture, the big numbers, the big eco data in Mexico, of course, coming for a disappointing, GDP expansion last year, etc. We're not so sure about what is the growth figure is going to be this year. Is it going to be 2.8? Is it going to be 3%? Energy demand in that backdrop, if we put it this way, in the last decades, in the past 12 years, Mexico growth has averaged pretty much 2%. Where do you see energy demand going forward in the country as a whole, and how that demand will compare vis-a-vis the GDP numbers that we are going to see?
Yeah. So overall, in the past 10 years, GDP has grown, electricity demand has grown a little bit higher than GDP growth. And we expect that trend to continue. So if within the next 10 years, we would say that, let's say that GDP growth average is 3% a year, we would expect an energy demand to be like around 3.8, 4%. It all depends on where that growth, economic growth, is coming from, right? So if it's coming, as it has in the past few years, from the manufacturing sector, which is energy intensive, we would expect maybe to that be closer to 4 than to the 3.8. So in that sense, most of the energy needs from the manufacturing sector, around 70% is electricity, and then there's around 25 to 30% that's natural gas. So in that sense, I think that in terms of energy, it's going to be maybe closer to 4 if we have good economic growth.
Exactly.
It is tied, but up to this date, it has been a little bit higher than GDP.
Than GDP. If we go back to the basis in this discussion, which is 2 private equity firms investing heavily in gas pipelines, all right? That is pretty much the core of the deal, Javier, of partner groups with, buying Fermaca, Adi, you with Los Ramones buying, 45% stake in the project. Why gas? Can you just explain the basic elements of why we're seeing this special boom, if we put it in that way, on gas?
I'll take it. It's similar to it's basically an extension of what we're seeing in the U.S. There's so much gas in the U.S. We own 8 or 9 E&P companies and a bunch of different shale basins, and just if you look at them, you have the geologic formations that we know about today, and then under those there are others. Just an abundance of gas, and that's why gas prices have stayed low, and we think they're going to stay low for quite some time. So because of the abundance and because of the price, and because it's environmentally more friendly than burning fuel oil, as you mentioned, it makes all the sense in the world to burn that for electricity if you can. Now, Mexico doesn't currently have access to all the gas that it wants, and in fact, a couple of years ago, there was curtailment of manufacturing capacity because they didn't have enough gas. So that's why there's this huge push to get as much gas there as possible, and there's if you compare, I think the number is like Texas itself has 10 times the natural gas pipelines as Mexico.
10 times?
Something like, don't quote me on that.
But but this is about to.
Yeah. So I'll let you finish, Javier, but there's just as much gas as you can bring to Mexico. I think they'll find ways to use it.
Yeah, I think it's a combination of a lot of gas in the U.S., much more than they have something to do with it. Almost every producer in South Texas is venting gas or flaring, and the lack of production in Mexico, declining production in Mexico, especially in the southern part of the country, As Adi said, if you were trying to develop a gas-fired power project in the last 5 years, you would be knocking on Pemex's door trying to sign a gas supply agreement, and you would not be able to get firm gas because they don't have the certainty. So it's a combination of gas in the north and lack of it in the south. And I would add a third element, which is lack of infrastructure in the middle to connect everything. So even when you may have gas in certain areas in the country, if you don't have the infrastructure to take it where the market is, as you probably know, then it's worth nothing. So that's why all this investment activity to create that infrastructure that hopefully will make the market much more efficient.
And to what extent this relates or is the byproduct of the fact that the legislation on gas is open to private investment since 1995, etc. Do you agree with the fact that this might be coming from that change that was enacted 20 years ago essentially?
Well, I think the activity started then, but I believe that maybe the most important factor recently is what Adi said, which is shale gas. That was not the case 20 years ago. And in fact, in that last 20 years, gas has reached $8, $10 in the U.S. So maybe under that dynamic, it would have been very difficult to do what is being done in Mexico right now, and the prospects of importing gas to Mexico maybe were not as attractive, but that has completely turned around. So it's a shale gas with $2, $3 gas that is making that possible.
And I use one word to describe, this current situation. I use sort of like a cheap way that we use as a reporter to say immediately, "Oh, this is a boom." Are we living a boom? How do you describe? Give me one word to what describe right now what's going on with these two gentlemen pouring money into the country and Marisol being super busy covering the companies that are in there. One word. Ladies first.
Okay. I would say this is only the beginning. I don't think we're in the boom yet.
All right.
I hope there's not a boom. Then, as we've seen with most other booms, then at some point it blows. So I think it just makes sense.
It just makes sense. Ali?
I've described it as a seismic shift, but it's a shift. It's not something that's temporary. It's a shift towards more openness and doing what's needed that will ultimately lead to GDP growth and other good things for the country.
All right. We have discussed and mentioned already, electricity, particularly in Marisol. And just recently, just days ago, Blackstone won the permission to start exporting all the electricity from a plant that they have in Texas called Frontera to Mexico. And this was a big win for Blackstone in there. And of course, that deal itself was supposed to represent big benefits for the actual users of gas, especially in the north part of Monterrey, the industrial hub of the country, or one of the industrial hubs of the countries. What is your outlook for electricity? Do you expect seeing appetite or increasing appetite?
What you mentioned is very interesting in the sense that ever since NAFTA was signed, the two economies at the beginning, it seemed like nothing really happened, and all the trade was a trade that you would expect between two countries, right? But what has happened throughout the years is that the economies have become a lot more integrated in the sense that, for example, something that is manufactured in Mexico, a lot of the times it's not really manufactured in Mexico, it's only partially, and goods cross the border several times throughout the manufacturing processes. And what we're seeing now in terms of electricity is also a bilateral trade. So for example, in California, with all of the new regulation coming into place regarding renewables, etc., what we have seen is actually the opposite, where Mexican companies are building wind farms close to the border and are going to export that electricity to Californian utilities in order for them to be able to fulfill with a regulatory percentage of electricity that comes from renewables, right? So in this sense, we're looking at this type of trade that I think it's only, as I was saying, it's only the beginning as both countries sort of start to see what's the advantage that each of the different countries have. So in the sense of the wind farm, Mexico has the advantage of cheap land, that it's basically a desert where they're building some of the wind farms, and for them it's very, very cheap to locate. Well, if you try to build a wind farm in California, you're going to get a lot more pushback. So in that sense, they're taking advantage of this. While in the deal that you just mentioned, you're taking advantage of cheap electricity on the U.S. side because they already have the gas, they already have the plant built, they probably have access to very cheap financing. And who's benefiting from that is the industry in Monterrey. So I think this type of thing is going to keep happening.
Adi, what's your point of view in electricity? Is a hot area for you to invest in there?
Yeah, we're very excited about the market. I mean, on the point you just mentioned, Marisol, I think it's a really good one. Take the automobile industry in Mexico, for instance. I think it's the fourth or fifth largest exporter in the world. And one or two to the U.S. Here's an example where taking natural gas from the U.S. to Mexico to help lower electricity prices potentially over time. Combining that with smart, efficient Mexican labor, and all the suppliers have hubs in Puebla, for instance, around the VW facility, and then the cars come back to the U.S. and of course the Mexican market. But yeah, in terms of electricity, it's going to be really interesting. There has been a bit of a boom in terms of wind in Mexico. There's, especially in Oaxaca, that it's one of the best wind resources in the world. Solar is pretty good in Mexico as well, though the supply chain isn't as developed, so prices are still pretty high relative to wind. What's going to be interesting, though, is that they're moving towards a wholesale market, much like ERCOT in Texas. And right now in ERCOT, it's very hard to build new generation because in a wholesale market, you don't have price visibility. It's hard to get long-term financing, and it's hard to justify building new power generation. So if they move to a similar market in Mexico, which it looks like they're going to do, despite the need, it's going to be a question of, does that detract from the investor appetite? And it's an open question because the market rules haven't been formed yet, and it's going to take a couple of years. So the answer is, for us, we're very excited about the opportunity because there's tremendous need. But it's going to be interesting to see how it plays out over the next couple of years.
And what's your call?
How will it play out?
Yeah. Where do you see finally the government saying, okay, these guys is going to be the rule of the game, the rule of engagement here?
I think they are moving to a wholesale market, but in a wholesale market, you can have things like capacity payments or add things to provide some price certainty. So there might be some back and forth before settling on a plan that works.
Okay, Javier?
I would add, with the creation of a wholesale market, you also will introduce volatility to prices. So as opposed to the way it works today, where every plant power plant in Mexico has a PPA to sell electricity to CFE or an industrial off-taker. Once you have a wholesale market and people willing to build power plants to sell just to the market, that will introduce some volatility. So maybe back to the discussion about prices. When there's volatility, you can have high prices, in maybe summertime, maybe lower other times when electricity is not as demanded. And that's something that completely new that has never been in place in Mexico. So, I think it will take some adjustment and a little bit of a learning curve.
But in that sense, I would add that I agree with you in how are you going to attract investment if you're going to basically ask for generation to come in as merchants. So what I would expect would be that the CFE would be acting as counterparty in some of these new investments, and and in the new generations, and either by signing long-term PPAs for most of the capacity. In that sense, basically the asset is going to have a guaranteed cash flow, and it's going to be a lot easier to finance instead of having a plant that who knows who's going to buy their electricity and at what price, and then you have the uncertainty of the price, etc. I think that the CFE is going to take some of that risk. They have to, right? They're owned by the government, and even though they're this new like public enterprise, etc. First of all, they're going to try to seek to reduce the prices to their largest customer base, which is going to remain. It's going to be the residentials, because most of the industrials are going to try to find a merchant and sign a PPA with them. So the CFE will most likely, in the very long term, most of their customers are going to be residentials or smaller type of commercial businesses, services. And in that sense, CFE can act as a counterparty, and then let's say that in 30 years, they still have some of these contracts in place and they're still alive. They could go and sell whatever they're not using in the spot market.
Yeah.
But
And when do you expect the CFE coming out and saying, yes, guy, I'm going to be your counterparty. I'm going to be just sitting shoulder to shoulder with you here and take the risk in these transactions.
Well,
when do you see that happening?
In that sense, they are tendering some different generation plants right now. So many of the Spanish companies have won some of these awards and some of these projects. So in that sense, they're doing it. I think that they want to see how much investment will come to Mexico without them giving the PPA, right? So we'll have to wait and see. I think that in the next 5 years, not a lot is going to be very visible, because either it's going to be with a contract with CFE, or it's going to be generation that's going to be serving industrial parks, and they're going to be willing to take the counterparty risk of an entire industrial park, or maybe a very good credit, which is something we had seen in the past with the mining companies, etc. But maybe after, like once all of these start to sell their surplus into a spot market, maybe some others will be more adventurous in the sense of I'll go and see what happens.
I'll see what happens. Okay. Before going to the next round of questions here about the legal changes and the legal framework in Mexico, I want to ask you something. This is a trivia question. Because we're talking about private equity investment opportunities in the second largest economy in Latin America. Question for you. How many private equity funds are investing today in Latin America? Just give me a number. I'm going to tell you it's less than 1,000. That's just, don't Google it, but give me how many private equity funds are investing today in Latin America? How much? 25? A little bit more? In Latin America as a whole.
Any industry?
Yeah, in any industry as a whole, the private equity funds.
Global funds?
Yeah, 50. I need something higher. 250 max is here. I need a higher bid. 380. Okay, what else? Well, for your surprise, 742. Okay, PE funds are today focusing in Latin America, and out of those 742, 189 are focusing on investing in energy, and ADI is the honor to work for the biggest of all, which is First Reserve. I didn't know that. You didn't know that. Let me ask you. The second element in here, or the second round of questions, is legal changes needed right now in Mexico after enacting, the energy reform, after enacting the secondary legislation. Right now, one of the discussions that are being, floated there by the CFO of Pemex, Mario Barregar, is that they are thinking on creating the master limited partnerships figures. I want you to take on that, Javier and you, Adi, on what will means for a country and for the Mexican market having the master limited partnerships in place.
It's been a structure in the U.S. that's worked very well, attracted a lot of investment, and I think it'll take some time in Mexico, is my guess, before they get it off the ground. But I don't see I don't see why they wouldn't be able to. I think there's some complications and things they need to work out with the Ministry of Finance and the broader government. But as investors in the midstream sector, in a way it provides an interest. It could provide an interesting exit opportunity over time, and do some good for the market. But I think there's a number of steps before something like this comes into play.
And do you think that will be with the fact that the Ministry of Finance, they need to lower or sweeten the tax treatment for these type of figures, for example? That's one of the biggest hurdles in there. My sense is it's at a relatively early stage, and I think I know over the past year bankers have been pitching it, and now it's reaching a higher level. I don't have any inside information in terms of how soon or how likely it is. It is. Javier, your take? Yeah.
Well, I think that if something like that is implemented, it would have to be tailored to Mexico. The way it was done in the U.S. and the reasons and the particular situation, I think, was different than the situation today in Mexico. To your point about sweetening the deal on the tax side, it needs to be completely changed. The way MLPs work in the U.S., I don't know if people are familiar with that, but there's basically no taxes at the company level. They're all transferred to investors, and that's something that doesn't exist in Mexico today. So a new major tax reform would need, or at least an adjustment to the current tax laws would need to be implemented to achieve that. My one concern with this is the volume of investment and transactions that are required for an MLP to be successful. And as Adi said earlier, there's a number of times more pipelines in the U.S. than in Mexico, and most of them were financed through MLP structures. So there was significant growth opportunities to grow cash distributions to investors, something that I'm not sure is there in Mexico. It's in Mexico yet. Mm-hmm. Again, as a figure, it makes sense, but I think it would require significant tweaks to make it work for the Mexican market.
Yeah. Marisol, any comments on this?
No, the only comment I would have is that many of the MLPs in the U.S. do have volume risk, while currently the contracts that we're seeing in Mexico are take or pay. So I think the bond market is more than comfortable taking this type of risk. It's a very noble asset in the sense that you're getting paid a rent. So at this point in time, I don't think it would be necessary for the gas transportation mm-hmm. business, but we'll have to wait and see how much more is needed, and if the need for additional resources is there, I'm sure that the government will try to find a way to make the financing as cheap as possible.
But we can succeed with the system as it is now and keep moving forward. Yeah, what I just want to try to achieve in here is, do we need the creation of these MLPs in order to just go to the next level in this process? Yes or no?
I think today, no.
No?
I think there's plenty of interest right now. Has been, as you can confirm with the transactions that have been going on, and the appetite that you see from other people that have not been successful but are still trying. And as I said, the MLP structure was created to promote investment when maybe there was not an ideal setup for that. So I probably not at the moment.
Not at the moment. Okay, great. Speaking about investment opportunities in general, one of the elements that people usually complain in Mexico when talking about the pension fund, you know, the more than a dozen of pension funds operating today in Mexico, is that they have not enough instruments to invest in, all right? And that one specific complaint is with the figure of the secades, which is like a very interesting figure that it was implemented, you know, in 2010, 2011, and has been, you know, quite successful to raise money, and is categorized as a PE transaction, all right? Any thoughts about that? Any thoughts about where the secade market will move, you know, going forward, and how that will open opportunities for you and the pension funds? To any of you.
It's a question for Max.
It's a question for Max as well in here, right? That is in.
Not really. I mean, we've seen interest from them to invest in the sector, which is, you know, it's a good thing. You know, there's obviously a source of additional financing for the sector, but I'm not sure where this is going to go in the near future.
Mm-hmm.
I think there's going to be increasing participation by the CKDs over time. I mean, for us, we see some benefit to potentially partnering or co-investing, or having them co-invest with us in some opportunities. It's nice to be partnered. You know, it's you know, from a risk mitigation standpoint with Mexican pensioners. So that's something we have in the back of our minds.
Okay, and are you working in any deals now, or, you know, starting to do some planning for such a deal, or is something that you see a little bit, you know?
I think it'll develop over time.
It will develop over time. All right, and talking about, Marisol, your activities, you know, covering the universe of companies that operates right now in the energy sector in Mexico. What is your assessment about the status and the health of those companies, and how they compare, you know, with what's been seen in other parts of the region, and not only Central America, that you also cover Central America and the Caribbean, but also in the rest of Latin America?
Yes. So overall, most of the companies that I follow that are infrastructure related in Mexico, most of them are investment grade rated, have investment grade ratings, and this is basically because even though some of them are growing very aggressively, and that's the case, for example, of Villanova, which is owned by Sempra Energy in Mexico, they have won many of the different tender processes from CFE and from Pemex, and they actually built Los Ramones 1, and in that sense, they have been they did an IPO not that long ago, and there's a lot of demand for their shares. So I think most of them have a lot of financing options out there. So in that sense, even though they are going to keep growing, they have the means to do so, either through the issuance of additional debt, or doing different types of partnerships, or selling a portion of some of their businesses to creating joint ventures, etc. So in that sense, overall in the region, in the rest of Latin America, most of the companies do have investment grade ratings, and it has to do with what I mentioned earlier, with the fact that this type of asset is very easy to finance, very predictable, and the cash flow is there. So as long as you have a good contract and a good regulatory regime that will guarantee that you're going to get what you were promised, in that sense, it's not very risky, which allows you to have higher leverage ratios than in other businesses where you don't have that certainty. So.
And how many of those companies that you cover are seeking to raise money, you know, for expansion plans in the coming future?
Well, it depends. All of them are trying to see how to finance their issuances. So I'm sure that Fermaca is also trying to see how they're going to finance all of the different tenders that they've won, and most of them want to continue participating in the others that are going to be tendered this year. I think it's going to be 8 new pipelines. So as long as the equation makes sense and you want to invest in some of these pipelines, you're going to have to find who's going to lend you the money or who you're going to partner with. And that's something that we've seen in the case of Fermaca, partnering with One Oak. And in that sense, I think they're going to partner. In the case of Yanova, they could do a second IPO, issue additional shares, because I think only 19% are floating, so they still have a lot more that they could sell. Or they could also receive cash flow from Sempra. So I don't think they're going to have any problems, but I think there's a lot of opportunities there, and it all depends on how aggressive you want to be and how many of these projects you want to build, right? But in general, most of the companies are bidding in almost all of them. So there are a few with some particularities that are not as attractive to all of the companies, but overall we've seen participation from TransCanada, GDF Suez, we've seen Carso Energy, Fermaca is always there, Yanova is always there, and we also have other companies from other regions. So for example, the Colombian companies, which are very good at distributing gas because they have a very developed distribution network, are also interested in Mexico, because the growth in Colombia in the sense of gas, most of the grid is already there, right? Yeah. And if you're going to expand, it's going to be very tiny expansions. So if you really want to do a big project, you either go to Peru or to Mexico. And there's a lot more projects being tendered in Mexico than in Peru. In Peru, basically, there's a big Gasoducto del Sur that has already been tendered, but those very big projects. But Mexico has a lot of those.
A lot of those. Okay. And going to, this situation here, how to finance the tender, for example, that you recently won, etc. What can you share with us about that? How do you plan to do it?
Being traditional infrastructure projects, you try to maximize debt financing in fully contracted assets. At least 75 to 80, maybe 85% of the total investment required usually comes from project financing, and the other part is the equity that we are investing, and that's why we're in the business. So that's the part that we contribute, and as we continue the expansion of the business, and if we are successful with some of the other tenders, I imagine we will follow the same model.
The same model. What about you, Adi?
Yeah, same answer. When you have strong take-or-pay type contracts, you can do attractive project financings, and there's a robust lender community that's looking to finance these types of projects. For instance, in Los Ramones, there's something like 6 or 7 different international banks that are in the lending syndicate. And there's a line behind them of folks that are looking to finance these types of projects. So a lot of appetite.
All right.
Any backup on that financing? You're taking all the risk. There's no backup by some of the international agencies?
We've something like political risk insurance or something like that. Yeah. And in other markets, we've looked at political risk insurance. There's, it tends not to cover the things well that you want to cover. Expropriation risk and things like that are well covered. But late payments and when you get more granular, it's tough to get coverage for those types of things.
The IFC
right now. And for instance, we have a project where we have OPIC and IFC as our lenders, and they're their traditional lenders. And again, in some cases, it's helpful to have an additional layer of political risk insurance. Well, there's always a risk, and that's why ultimately the equity bears that risk, and if it's really bad, the debt bears the risk too.
I think in Mexico, it's if you have a project that is fully contracted with someone like CFE or an investment grade off-taker, it becomes really the sponsor's choice. What is the optimal financing structure? But as you said, you don't really need it. You have typically a long list of banks willing to lend to a solid project like these that we're discussing today.
Mm-hmm. And having said that, let's get also additional help from you, members of the audience, in order to ask questions in here. And I'm gonna say one really, really mischievous one for the very end. So don't leave me alone here again. So, questions from the audience? Yeah, please. There at the back. Can you just say your name and hold on.
The question for the panel primarily is how are you going to deal with these FCPA problems that are constantly nascent? It's been very common for companies that operate in Mexico to pay right away to the municipalities, to the local communities, and it's a big problem right now. How do you expect that your portfolio companies and any others will deal with the inability to put your truck in and out of location without paying some sort of fee to a local band and make this non-permanent?
I can start. Yeah, we have, in our case, we have a very strict FCPA policy. We have training. That's one of the key issues that we focus on even prior to making the investment decision. Make sure that the company that we are involved with is already following FCPA procedures, and again, that we can reinforce those. So at least in the case of Fermaca, again, we have a policy in place, constant training, and not only that, but monitoring as well. So up to today, we haven't found any issue. I'm not aware of anything that has happened on the field, but at least if it has happened, we've been able to avoid that and resolve it, in following with established procedures.
Mm-hmm.
Same for us. We have a no tolerance policy regarding FCPA. We before we make any investment, we spend a lot of time on FCPA diligence. So yeah, same as Partners Group would do.
Mm-hmm. Yeah. Please, need the microphone here. Just.
Thank you. Nice to meet you. I'm Rafael Salas. I studied environmental studies at Harvard University, but I'm Mexican, and I'm really concerned about how much or what percentage are you from your money is going to build a greener energy sector, because, I didn't saw too much about that, and I wish to know what plans you have about that.
Yeah.
Yeah.
Thank you.
For us, around the world, we have investments in renewable projects. We have 250 megawatts of solar projects in Europe and in North America. We have 450 megawatts of, now it's closer to 600 megawatts of wind in the US and Mexico and Europe. So that's on the renewable side. But in terms of the pipeline, I mentioned this a little bit earlier. First of all, natural gas is displacing dirtier burning fuels like fuel oil that are cause a lot more environmental degradation. So natural gas is clean burning, and then also pipelines are displacing trucks right now. This is particularly true with gasoline and diesel and other and crude that gets trucked around Mexico. The environmental cost for trucking all of this product is substantial. So there's a lot of environmental savings that go into pipelines, both economically as well as environmentally.
Yeah, we have similar portfolio of solar and wind projects around the globe. I would add Mexico has also a very strict environmental law, and the requirements to get environmental permits are not easy to meet. So you have to have in place also very detailed plan. For example, when you're building a pipeline, along the right of way, there's numerous studies you need to comply with. If there, to the extent there's, you're going through, environmentally sensitive areas. Again, there's a very detailed plan that you need to comply with. So obviously, that type of companies that are involved in this are sophisticated, and you meet those requirements.
I was really impressed by looking at as we're clearing the rights of way for the pipeline. There's a plan to go in and remove vegetation and replant vegetation. They have a very strict policies on that. So along the way you have these gardens that get temporarily set up from plants that get moved, and then they get replanted. So in my mind, they're doing a very good job of, and Mexico's very focused on preserving its environment and setting the right
animal species.
Yeah, exactly.
Pictures. If you're replacing a little turtle, you need to take the picture, put it in a safe place, put it back in place. So it's very, very, very strict.
There. Okay. Yeah, the lady here, please.
First of all, thank all of you for a very informative and wonderful discussion. I have a question, I think a follow-up to something that Ari said with regard to shale. I think you mentioned that it might not be a few years until you see investment in shale. So two parts of that. Is Mexico's shale mostly wet, as in oil, or is there a lot of gas there as well? And because shale is so real estate intensive, are you seeing at least investment in the real estate now? Someone's going to have to, or going to want to tie it up, I would imagine, before they start investing in the wells.
Yeah. So on your second question, certainly there's I know land values have definitely risen in areas where there's prospective energy resource, and yes, there's wet and dry fields. If you look at the Eagle Ford, it extends down and into the Burgos. There's significant shale resource there. Why I think it's going to, and this is just personal view, it's going to take a little longer. First of all, there's just, like I said before, there's so much in the U.S. Natural gas prices are low. People are sitting on gas right now, waiting for prices to go up. So you take your marginal E&P producer in the U.S. and should we go into Mexico, or should we stay in the U.S. and continue focusing on what we have? And most of them are trying to stay focused, let alone they have a number of cash flow issues right now, given the low prices. And then the setup is different in Mexico as well. The mineral rights. So the landowners don't get the benefit of owning the resource. It would be just through a rent payment that they benefit. So for a variety of different reasons, it'll probably take a longer period of time. But at some point, I think because the resource is there, it'll happen.
And one addition to that, and just is the fact that oil prices right now being in the range of 60, and the cost of production in Mexico is in the $80-90 per barrel, oil equivalent, etc. It will I assume take some very substantial increase in prices in order to make those projects profitable again, viable at some point. No?
Yeah, I think as Marisol said earlier, the lower cost production areas will continue to be developed. Maybe the deep water fields are the ones that will be put on hold until prices climb back up to whatever, $80.
All right. More questions from the audience?
Again, thanks to the panel. My question is more for the investors. I'm interested in finding out what is the time horizon of your investments that you're making in Mexico? What kind of returns are you expecting? And then ultimately the exit strategy. Are you looking to sell off to an operating company or public issuance? Any ideas, any plans for those?
As far as time horizon for our investment, typically our funds are 10 to 12 years. So that's how we go into an investment normally. That doesn't mean that we can adjust that period to exit earlier or even extend it if necessary. Most importantly, I think we want to implement the business plan. As I said at the beginning of the conversation, we're expanding the business today, and maybe that's an effort or a stage that will continue for several years. Exit, again, Marisol mentioned one possibility, which is IPO. There's already precedent to that. But again, we remain open also, at some point to sell the business or stakes, to partners or somebody else that has interest, as we discussed, to get into this sector in Mexico. I'll let Addie talk about returns.
I was hoping you were going to cover that in the first one. So our infrastructure fund, which is what we invested Los Ramones and the wind projects, we're a 15-year fund. We look to hold investments for a long period of time. Our investors that are pension funds, sovereign wealth funds, they want us to focus on generating yield over a long period of time. So that's what we're focused on. Our private equity fund, which may become increasingly active in Mexico, has a shorter term horizon and typical return targets. I'm not going to get too much into what our infrastructure fund return targets are, but and then
double digits.
somewhere around there. And then our exit strategy, I think we're banking on Partners Group. No, same type of exits, IPO, other funds like ourselves or sovereign wealth funds or strategics. There's a lot of appetite for these types of projects.
All right, great. More questions? Yes, we have the gentleman here.
Hi, Christian Ray from Banco Espírito Santo. 2 questions, if I may, for the investment side. The first one is, during the investment decision process, what was the most important factor from a financial and profitability point of view? Was it the contractual nature of the contract with CFE and the strength of the cash flows that was the most attractive to you, or was it the residual value given the strategic value of the asset? And for the rating sector, I wanted to ask, how do you see CFE risk? Currently, the risk reflects the government support that is behind the company, but in the context of, for example, privatization, how do you see the financial strength of CFE from a standalone basis without that support?
So on your first question, maybe a couple of things from that were the key factors for us on the financial side. One definitely was the anchor contract with CFE that allows you to raise financing, have a secure stream of cash flows for a long time. And I would say that the second was the possibility of expanding or setting up a platform and the possibility of expanding it. As we've been discussing, there's more opportunities coming up, and we thought it would be very important to have a platform from which now not anymore as an outsider, but now with the foot on the ground, we can bid and compete for some of the other opportunities.
Yeah, for us, the same thing from an investment standpoint. Our counterparty in this case is Senegas, which is a new entity that's been set up to oversee the natural gas infrastructure of Mexico. So it's effectively sovereign type counterparty. So yeah, the contract is very important in analyzing the take or pay elements as well as the tariff structure and how it works. But similarly, in terms of strategic value, Los Ramones, it's a trunk line. It's going to be taking a lot of gas through Mexico, but over time there will likely be offshoots and I think it's just critical real estate that should have increasing value over time.
All right. Marisol, you're tying to CFE?
Yeah, getting to CFE. So you're right, the rating on CFE reflects the rating on the sovereign, and basically because we see them, we basically qualify the relationship between different companies and their governments with different qualifiers. In the case of CFE, we see that the likelihood of government support is almost certain. And basically, this is because CFE is the only provider of electricity in the country. So in that sense, not a lot is going to change with the energy reform. In that sense, CFE is going to continue to provide electricity to all of the residential customers and most of the smaller commercial type of businesses. So in that sense, we don't think that is going to change. We do rate CFE also on a standalone basis, and I believe it's a BB- the way we look at it. Now, in that sense, if it were to be privatized, I don't think it would be the BB- because right now this rating reflects some of the disadvantages that CFE has also as being a subsidiary of the government, right, or a government-related entity. And some of those disadvantages is that the tariff regime is set by the Ministry of Treasury, so it does not really reflect the cost of generating. And in that sense, not a single private company would agree to operate and to be able to generate any sort of return in this type of environment. So until that changes, and the new law does involve the Regulatory Energy Commission, or the CRE, in the process of determining what the tariff should be. But at the end, it's still the Ministry of Treasury that decides the tariff, and as such, it is basically exposed to political intervention, right? So that's one of the things that is let's say it's a weakness on CFE right now. And the other one is the unfunded pension liabilities, which are very large. If you look at CFE's leverage, it's not that high, but once you add up all of the pension liabilities that are completely uncovered, that's when the company looks a lot different in terms of leverage. So I think that in order for, and I don't think it's a plan for the government to privatize a company, but if something similar to what happened, for example, in Colombia, where many of the different utilities, even though they were not national, they were more like localized, but they started to become a lot more like private entities, up to a point where many of these were sold. This type of thing had to be dealt with, and it had to be dealt with in the sense of the government taking that risk, or the good thing with CFE compared to other government-related entities is that the problem is sort of capped. So any new employees that are hired by CFE do not have a defined benefit type of pension. So in that sense, it's not going to continue to grow more than actuarial estimations, etc., right? But that's something that would have to be dealt with.
To be addressed in there. Speaking of the CFE, between July and August, the company is going to award contracts, four contracts for power plants with an estimated investment of $3.8 billion, almost $4 billion more. And this is going to be announced, in between July and August. Interest from any of you in the partnering, or doing something with this type of, very substantial investment that are going to be needed in electricity?
Yeah, in principle, yes. We're interested. We're aware of the different projects and following the process. At the end of the day, it's a question of how competitive it's going to be and whether it makes sense to participate. There have been, also Marisol mentioned that earlier, there have been very strong players in that area, mainly Spanish companies.
They are very well known for that.
And so, I guess we need to know our strengths and where we can be competitive and where we cannot. But I think it's a great program that.
So what's going to be the name of this match? Partners Group against Spain? That's how we're going to call it.
Or Spain versus Spain.
Spain versus Spain. Adi, what's your take on this?
Same answer. The CFE has done a great job of finding good partners for their projects. They've invited participants from all over the world, literally all over the world. So it's we're certainly monitoring and looking at which ones we want to participate in. But there's robust competition.
In that sense, that figure might be a little bit overstated, because in the past few tender processes, the winning bids have been like 40% less than what CFE expected. So in that sense, I think they're benefiting also from the fact that there's nothing being built in Spain right now. So if you're a Spanish company and you want to grow, you have to look to Latin America.
Exactly.
And if you look to Latin America, Brazil is a little slow right now. And they're comfortable with the Mexican regime. They're comfortable with the counterparty. So that's why they're being aggressive with their bids. So I think in that sense, that's a positive for the country overall.
Okay. More questions? Yeah. Here's one here.
Thanks again for a great conversation. Nick Stable from GE. Thinking about risks for some of these projects, we've had a great discussion. People have talked about compliance, talked about potential technological risks, like with the grid not being able to handle, sort of investments. What do you see as the top 2 or 3 risks of the projects that are out there, like maybe having a short-term or long-term view?
I think on the gas pipeline side, at least in my opinion, the single largest risk is the acquisition of the right-of-way. It's as you can imagine, complex. You're dealing with depending on the pipeline and the location of the project. You're dealing with 500 to 1,000 landowners, ejidos, which is communal property in some cases, which is not easy to deal with, and that normally is your critical path in the entire execution process. So I normally don't sleep well until we have 95%, and even then, because the last landowner can be the one that makes your life difficult. So that's by far in the case of gas pipelines. Once you have the right of way, not that it's easy, but it's we're not talking about rocket science. We're talking about digging a hole in the ground and laying pipe, and in some cases compression, which is can be complicated, but again, nothing that. In fact, GE is a well-known provider of technology for that application. So it's not that difficult once you have the right of way in place.
Same. It's the construction process. So acquisition of rights of way and getting all the environmental permits. They're called etejotas in Mexico, especially for land that you need to change the land use for. So just navigating the permitting process, because ultimately what you're working towards at the end of the day is trying to get a project that's done on time and on budget. Because in some cases you might have penalties to pay if you don't do that, or you're burning a hole in your pocket from the interest during construction that just builds up over time. So it's really focused on the construction process. Once you have it in operations, you can take a lot of the risks you worry about off the table. There are other ones, but those are the big ones.
Mm-hmm. We'll have space for one more questions.
So I have a question around, so just following from risk. Do you find from your investor perspective that they expect higher returns? What kind of returns do they expect in energy infrastructure? Do they look more like private equity returns, considering you're investing in Mexico? Just like your perspective on that.
Yeah, we talk a lot about this internally. What risk premium different countries deserve. We resist ascribing a particular risk premium to a country. Rather, we look at the individual components of opportunity. So, foreign exchange exposure often is your largest potential risk. So there's FX. How contracted is the contract? Short-term contract, long-term. Are there merchant components? What are the strength of your counterparties? What's the construction scheme? Do you have a fully wrapped construction, or are you taking risks? So there's a lot of different components that you put together, and that's how we look at it, as opposed to just saying, okay, this particular country deserves a 200-300 basis point premium to the U.S. or whatever it is.
And I would add, it's constantly moving. If you look at what Brazil was demanding in terms of return a few years ago and what it should be demanding today, I think it's significant shift. So it's difficult to zoom in on a specific number. I think there's reference points you can use. Looking at how comparable projects price in the U.S. or other countries, and at least making sense that you arguably are taking on a little bit higher risk, and therefore you should justify that by higher return. But again, unfortunately it's not exact science, and again there's an element of subjectivity at some point where if you're successful in establishing a platform and you have a long-term view, there is value creation over that period of time. Again, very difficult to assess that when you're looking at an isolated single project.
Let me ask you something. Talking earlier in here with one gentleman of the audience about opportunities in the traditional oil sector. And we are, poised to see the round one with an estimated as much as 169 oil blocks will going to be out there for auction by the Comisión de Hidrocarburos. How do you participate in this type of thing? Is it an area that you guys can go there and say, yes, I can partner with a driller, or, that is qualified to this type of job? Is that a possibility for you, or is not?
It wouldn't be out of our infrastructure fund, but in our private equity fund, we're evaluating whether to participate. We have a number of companies that play in the deep water. One, we have a partnership in Brazil with Petrobras called Bada Energia. Gulf of Mexico, we have Deep Gulf and Cobalt. So a few different examples where we play an offshore E&P. I think the most important thing is we're evaluating whether to partner or create a new company. Is the strength of the management team. And there has been a company that's been created, Sierra, to focus on the Mexican market. I think, and then Morales is in the process of creating another company with Grupo Bal. So you might see one or two more, is my guess. But there's not a deep bench of management expertise that is ready to create these new companies.
You're talking about local expertise that have the know-how, how to deal with the situation like the heater, for example, in the case of building a pipeline.
That's right. Yeah, I mean, you have Pemex. That's and they want to try to retain their people. What's your take, Javier?
Very similar. We don't invest in at least as infrastructure in the upstream space. We don't take commodity risk. Similarly, our private equity group might be interested, although I think that they don't take commodity risk either. Having said that, we have a vested interest in seeing this succeed, and we'd like to see the program go well and round one being successful. That will require quite a bit of infrastructure down the road to move oil and gas from producing areas to the market, right? Processing and the market. So again, we're cheering from the sidelines, but we're not direct investors.
And do you foresee like a substantial amount of investment needed for this type of blocks when they start operating full-fledged, etc., to demand all of the infrastructure? And if so, can you share a figure with us, for example?
Yeah, I don't have a figure, but it's definitely a significant amount of investment. When we were talking earlier about the $1 trillion, my view is that a good part of that is going into precisely the offshore upstream in general, but maybe in particular the offshore space. And again, if you're successful in your E&P program, if you're producing, you need to take that to processing and then to market. So again, I don't have a figure, but I think it's easy to see that it's in the billions of dollars of infrastructure that you would need, to accommodate all this additional volumes.
Latin America private equity fundraising, and this is fundraising in the lingo or in the of the industry, continued to rise last year in 2014, and we actually saw a 73% increase in funds dedicated to the region, to a total of $9 billion. $9 billion. And that compares with $5.2 billion in 2013. My question to you is, how much money is sitting in the sidelines of the PE industry right now that wanted to be invested in Mexico?
A lot.
A lot?
Yeah, again, I don't have a number, but just based on your events like this, I think Ari and I have been in other panels in the last few months discussing the same topic, with a lot of interest from the audience and companies looking at ways to get into Mexico. Marisol mentioned the Colombian companies. So again, very difficult to come up with a number, but again, I would guess it's in the billions of dollars from both strategic as well as the private equity or the infrastructure side, institutional side.
Ali?
Yeah, same. We're seeing a ton of interest. It helps that there's been a lot of exposure through the press, and that there's meaningful change that's occurred in the country, and everyone's antenna is up right now.
Okay, all right. As we're approaching in the last minute of our conversation, I want to ask, we pretty much, and probably you agree with me on this, that we already discussed where we are now, the opportunities that lies ahead, etc. But if I ask you, Marisol, in one phrase, where do you see that future for the infrastructure and energy sector in Mexico playing out? Are we going to what? You say that this is the beginning, all right? The beginning of what? I want you to do, and then I take it. How do you?
So it depends on what term you're looking at. I think in the short term, investment is going to pour in, and in the medium term, we're going to see lower energy prices, and we're going to see the Mexican electricity and energy sector in general a lot more interconnected with the U.S. market. Because what has happened up to date with, for example, what's happening with the pipelines, what's happening with electricity will eventually happen with oil as well. And so I think there's going to be a lot more integration in that sense, and I think it will definitely benefit the economy, and will, not only because of the growth and the investment that it's going to bring by itself and the jobs that it's going to create, etc., but I think that it will filter into other sectors of the economy.
Where are we heading to?
Yeah, I completely agree. I'm very excited for Mexico. The interconnectivity, the availability of natural gas and other resources is going to help drive the lower electricity prices over time, new manufacturing capacity, more gas-fired power generation, more jobs, and eventually GDP growth. So I really think they're doing the right things, and it's exciting.
And this is part of the shift that you mentioned earlier in the conversation?
Yeah, exactly.
And we're shifting in the right direction, are we?
Shifting in the right direction.
All right, good. Javier, you said that you hope that this is not a boom, all right, when we were talking earlier, and if it's not a boom.
Well, I hope it continues to move in the right direction, that there's rationality in the way things are done and the way investments are done, but I think that the train has left the station, and this is moving in the direction of complete openness the energy sector. I think it will be at some point fully integrated with the U.S. on the gas and electricity side. And to me, the big question is how successful the offshore rounds will be. That's, I think, what will determine, maybe not so much, whether we go back to the old days. I don't think, again, I think the train has left the station, but really how fast you get to where, we also are saying this is going, right? That's successful, maybe the other factors, right? The world is no longer isolated area, so if everything cooperates, I think, this will continue to move in that direction.
And one really last question, one rapid fire here. Who won on Saturday, Pacquiao or Mayweather?
Well, we'll see once they have the rematch.
Is there going to be a rematch already?
They want to.
They want to. Oh, but on that note, we wanted to say thank you so much, to all our panelists in here today, Javier and Marisol and Adi, and we wanted to say on behalf of the Council of the Americas, thank you so much as well for being here tonight. It was a great pleasure. So
Just one announcement.
Yeah, please.
Join us in Mexico City on May 21st for our conference that will have as topics cybersecurity, climate change, and also more information and more on energy infrastructure. And now we invite everybody to go next door for some refreshments and networking. Thank you to all of you.